the Economic Update with Tatiana Bailey.
In today's update, as the trade war continues, the U.S.'s largest trading partner, Canada, is finding other partners to buy its goods.
Right now, Dr. Bailey breaks down how tariffs are impacting Canada's trade deficit and how long-term implications will affect the U.S. economy.
Trade flows are typically thought of as large systems that are well established and slow to change. Because of recent disruptions, I've been watching those trade flows carefully, and I have to say I'm quite surprised with how rapidly they appear to be changing. As our second largest trade partner, let's look at Canada. In March, Canadian exports to the U.S. fell 6.6% in 1 month, which is significant, as fully 77% of their exports went to the U.S. in 2024. I would have thought that devastating to the Canadian economy. However, the Canadian export portfolio has proven resilient. Canadian exports to non-U.S. countries jumped nearly 25% in March, underscoring how quickly trade flows can recalibrate. Because such a large portion of Canadian exports have historically gone to the U.S., the nearly 25% uptick in Canadian exports to other countries roughly offset the decline in exports to the U.S. in dollar terms. So, even with its heavy reliance on the U.S., Canada seems to have found other partners to buy its goods. The Canadian trade deficit in March was about 1/3 of what it was in February. Meanwhile, the U.S. trade deficit surged 41% in March due to firms that stocked up on parts or finished products ahead of more tariffs, contributing to a 0.3% contraction in Q1 GDP. In addition, a very recent Penn Wharton budget model forecasts a $22,000 lifetime income loss for middle-income households due to tariffs that are currently in place, with older households disproportionately impacted due to fixed income and retirement portfolios. Lastly, I worry about the long-term implications for the U.S. economy. Once other countries establish new trade flows, will they quickly pivot back to the U.S.? And what about companies like Ford that have already raised prices by $2,000 on their Mexican-made vehicles, citing a $2.5 billion tariff burden this year? What's happening in Canada and Ford's recent price increases appear to substantiate Penn Wharton's estimate of a $22,000 lifetime income loss, and that's in the absence of any additional tariffs. As I always say, it's difficult to say where things will land, but the trends I'm seeing thus far are sobering.